Hi, friends, welcome. So we're moving on to one of the key items in auditing. Personally, and any other audit lecturer or audit practitioner will tell you this is the heart of audit. Okay, this is the very heart of audit and has to do with audit evidence. Okay, audit evidence. So you always hear that auditors want to gather sufficient, appropriate audit evidence to support their conclusions. Okay. And you hear of management assertions, okay, completeness, accuracy, existence, rights and obligations, those ones. So we want to go into those ones, okay. Once again, let me just put this disclaimer or caveats around. Listen, you don't have to think that it is so much of a work, because we'll be coming across some terminologies, we'll be repeating items over and over, okay? So audit is such a way that it is like, it's not like a continuum, okay? It is like a cycle. It comes, it revolves. So today we're talking of ethical standards. Tomorrow we'll be dealing with something different, systems-based auditing. And you will hear ethical standards there, okay? Today we are talking of audit evidence, and you will be hearing professional skepticism there. Tomorrow you will hear another professional skepticism on another side. So it is cyclical. You hear it, you hear the term. So with the passion with which you will have for the course, for the module, will cause you to enjoy it the more, the better, okay? The more and the better. Now, before we go on, there's something interesting about this book, okay, which I would always want you to look at, okay? You don't have to buy the books, although I know not everyone will have to buy the book, but those of you with passion for auditing, get the book. Now, you will see real world auditing, clear case scenarios, stories which have occurred in the field of audit, okay, which will serve as something to motivate you and cause you to be cautious when you are practicing the profession, when you are in the profession. Now, under audit evidence, there's this real world auditing scenario under professional competence and due care. We've looked at it, you remember, under ethical standards. Now, in 2019, we had this situation in the UK. There's this giant facilities company called Serco Geographics. Do you know what happened? These guys actually overcharged the UK government for offender tagging contracts between 2010 and 2013. They overcharged the UK government. Now, the auditors went in to do the audit, and what they did was fraudulent. What the company did, Serco Geographics did, was fraudulent. They overbilled the UK government, okay? And they thought nobody would find them out. Unfortunately, some other investigations revealed it. Now, the auditors went in. The auditors then was Deloitte. Deloitte had audited them between 2011 and 2012, and they didn't find anything. It was strange, actually, because more or less it was like the auditors did not apply professional competence and due care. So the auditors were also fined. Now, the company itself were fined 19.2 million in 2019, just recently. 19.2 million plus extra 3.7 million in costs by the Serious Fraud Office in the UK. What about the auditors? Deloitte was fined 4.2 million by the Financial Reporting Council, okay, for their audits, because what the FRC said was that the firm and then the audit partner, I think the senior partner by then, Miss Helen George, they were also severely reprimanded because they did not conduct it with professional competence and due care. That was a fundamental thing. They failed to act in accordance with fundamental principle of professional competence and due care. So that was what happened, okay? In fact, what they said was that they did not apply proper principles of the several ISS, okay? They also failed to act on clear indicators of risk of potential fraud, despite these being set out in the audit files. And of course, they failed to identify the risk of fraud or any serious misstatement and failed to exercise appropriate level of professional skepticism. We're bringing that one up. That's why I'm driving at professional skepticism. Remember, auditors, if you remember the Kingston case, okay, the Kingston cotton cotton mill case. They said, we are not bloodhounds. We are not going there sniffing for errors. No, but we're going with a suspicious mindset that somebody may have committed an error. So we need to find it out and then fix it, okay? Or suggest a solution to fix it, okay? Now, let's move on. I'm going to share the slide. It's voluminous. It's not voluminous, but what I'm saying is that this is a part of audit. So I'm going to split it into 2 parts, okay? So that we don't rush it up. We don't rush it. So we'll deal with 2 parts. I'll just deal with the first portion. And then when we go to the test of controls and substantive tests and directional testing, we'll just deal with that one as the second part. So we'll look at audit assertions. When you hear the word assertions, we're talking of management assertions. It's the same thing like in English language. When somebody is asserting, then the person is stating some item of fact based on what he knows, okay? So he's saying something. Let me put it in a layman's language. He's describing something. He's saying something that this mouse is clean. That's what I'm asserting. This mouse is wireless. It's clean. Is it true? Is it wireless? Is it clean? So somebody will have to come and verify. Really, is the mouse clean? Is it wireless? Okay. Professional skepticism. We'll look at that. That's what I started with. Okay. So we'll look at that very important one. What do we mean by sufficient evidence? What do we mean by appropriate evidence? Okay. Audit evidence should be persuasive, not absolute. Okay, not conclusive. That's why you always hear audit. We say audit is a reasonable assurance, not an absolute assurance. We cannot find everything. So reasonably, we deal with some samples. Okay. We'll now look at sources of various audit evidence and what does constitute evidence and what does not constitute good evidence. Advantages and disadvantages of using an auditor's experts and the conditions under which one may be used. Okay, and then we look at the responsibility of the auditor towards evidence and opinions provided by specialists. Okay, specialists. ISA 500 talks of audit evidence, and it says, let's gather sufficient, appropriate audit evidence. Okay, at the end of the day, we end up providing a reasonable assurance that the audit risk is reduced to an acceptably low level. A keyword is coming out there. What is audit risk? Okay, like that's why I started and I told you that the audit model is cyclical. It meets each other. A term will be used today. Tomorrow you meet it again. Don't be surprised. Okay, I'll explain what audit risk is. Audit risk is the risk that the auditor will not arrive at the correct conclusion. Auditors are humans. They make mistakes. So I tell you that this is clean. That's what I've said. But for all you know, I made a mistake. It is not clean. It is partially clean. Okay. So when we gather sufficient, appropriate audit evidence, it helps us as auditors to undertake our work with some reasonable assurance that the opinions we draw, okay, the conclusions we arrive at, to a very great extent will be correct. To a very great extent will be correct. Okay. Sufficiency talks of quantity, whereas appropriateness talks of quality. Quantity depends on what you are working on. Quality depends on the sources where you're getting the information from. Okay, so let's look at this. Okay, one, quality will give us a standing, a grounding, a reliable ground, okay, a relevant ground upon which we draw a conclusion. And then the quantity, of course, depends. Okay, so like I said, the quantity of audit is affected by the risk of misstatement. The greater the risk, the more evidence, the more quantity I need. The quantity is also affected by the quality. The higher the quality, the less quantity I need. Okay, so I pick a little, but the quality is high, I need less. Okay, all right. So sufficiency and appropriateness, okay, are related. The quantum of evidence you get and the quality of evidence you get, they are interrelated. They're interrelated. If the quality is low, We need more. We need a lot of quantities, okay, to confirm. So just obtaining more evidence may not compensate for its poor quality, remember. So I would always go for quality. If I get quality, I'll go for it. What we are saying is that the fact that you gather more and more and more and more evidence does not mean that it is quality. You can get thousands of entries or evidence, and yet the quality could be poor, okay? But of course, give and take, using the law of averages, we might think that the more quantity, the more the quantum we get, the better the quality, or the relationship, the higher the quality. Sufficiency of evidence, like I said, the quantity depends on the degree of audit risk. And here you need to consider several items, okay? The nature of the industry. If you're dealing with the financial services sector, where you are looking at items like futures, swaps, options, derivatives, let me put it that way. If you're looking at these derivatives, then of course, you know for sure that the quantity would be more, depending on the particular sector or section which you are interested in. Okay, so these are complicated items. Okay, these are complicated items. If you're looking at high technology industries, complicated areas, okay, so you may always want to see vary the quantity. I'll go for more quantities, okay? For these ones, these futures can be tiny, tiny bits of pieces. You can get thousands and millions of transactions occurring in a day. Construction industries, I'll pick less, okay? Construction industries, because you're dealing with materials for building, so you can actually see them. If it is about, let's say, verifying the buildings, the real estate, you want to count thousands? No, just a few, okay? Just a few. So consider. Again, you have to also look at the past experience of the client. If this client has some past records in terms of falsifying accounts or has issues with material misstatements of accounts, then, of course, we'll increase the sufficiency of evidence. The source of the information and how reliable the source is also important. So if the person providing us the information is someone we cannot trust, we will need more quantity. We need more sufficient, okay? The nature, the materiality, and sensitivity of the account balances. Some account balances are quite sensitive. Director's remuneration, is it sensitive? It is. It is. When we talk of remuneration, we're talking of every package, not just the basic salary, okay, whatever allowances they get. If you have to quantify some of them, if you have to monetize some of them, sorry, then of course you need some good number of evidence to support it. Also, we need to consider the financial position of the business. Is there any potential for fraud? Then we may want to increase or consider what quantity should we use. If the internal control system is well designed, but not properly implemented, you may want to consider more quantity. But if the internal control system is well designed and well implemented, the control environment works, there's no management override of controls, then you may want to reduce the quantity, okay, the sufficiency. Appropriateness, like I said, we're looking at how relevant it is, how reliably can we place our hearts, our thoughts, base our premises on to draw conclusions, okay? Now, conclusions about these relevance and reliability is based on the source of the evidence, okay? Now, let's look at the source. Let's look at the source, okay? The source of the evidence and, of course, the purpose for which it is required, okay? So the purpose, the source, and then now, any evidence that the auditor independently generates is most reliable, okay? So he could use, and of course, most audit firms use statistical tools to generate these evidences. When I was in KPMG, we were using IDEA, Interactive Data Extraction and Analytics or Analysis Tool. Very good tool, very good tool. I had also used Caseware when I worked with them, General Conference Auditing Service. So Caseware was also quite good. World Vision, what tool did we use? I've forgotten. I worked with World Vision internal audit. What tool did we use? I think we did our own. I'm not sure we had a tool. I've forgotten. So tools are there. We have a lot of statistical tools you could always use to gather your data. So you could also observe, physically inspect, or reperform some analytics as an auditor to confirm how reliable that evidence is. Again, we always say that if it is not written, it is not done. So don't keep the evidence in your head and just go and narrate it. Write it, document it. So evidence written is far more reliable than those orally presented. Evidence we also gather from internal but knowledgeable third parties is most reliable than data we generate internally from the client, okay? So external evidence more reliable than internally generated. Again, when the data is consistent over time, you continue to generate that data or that evidence and realize it still sings the same story. It is more reliable, okay? It's more reliable. Now, auditors would want to corroborate our evidence. So that's why we don't pick evidence from only one source. We pick it from several sources to make sure that they all sing the same song, okay? So corroboration of audit evidence is quite important. Again, we would always want to see the original copies, not the photocopied or the scanned copies. If you get the original ones, it's the best. Okay, it's the best. People falsify accounts. So if you go for duplicates or carbon copies, no. So now you always see NCRs, non-carbon receipts. We want the original. We want a duplicate, okay. Professional skepticism, like I said, okay. So if you remember the dictate or the judgment that came out from Lord Justice Lopes in the Kingston Cotton Mill case that we cited during the audit liability discussions, which occurred in 1896. You know, we were told that as auditors, we are not bound to become detectives. No. Of course, we go in and people think we are detectives, but we are not bound to be detectives. If we're able to detect, that's a good job, okay? We are watchdogs. We are not bloodhounds sniffing for information. So under this particular caveat, okay, we are being told that as an auditor, don't go in with a suspicion of dishonesty on the part of somebody, but go in with a suspicion that someone may have made a mistake, okay, somewhere, and that you want to check to see how we can correct this mistake. A story is given Gale in 2007. This guy, Eric, he was the owner of a development property. He had defrauded the business for quite a long time. He said almost 20 years. And when he was questioned, why was he doing this? And that is his fraudulent activities were not detected. He said accountants are lazy. They come in, they ask for the figures, he gives it to them, and that's it. The accountants are just content with it. They need explanations, she will give them false explanations, lie to them, and give them some falsified pieces of paper. And that is it. The accountants will not go and dig deeper. Their checking process, he said, was abysmal. And he said he was never worried because he knows these lazy guys will come in and they will not do any proper verification. They will not fish for details, okay? No lack of knowledge in an accounting and auditing, no interrogation. So for him, that's okay. If we do that, friends, like what happened in the case of the circle geographics story I told you about, we may end up putting the company in a deep problem, okay? Of course, I remember, I'm sure in the circle geographic situation, the senior partner, Miss George, Helen, she wasn't the one who conducted the field work. I'm sure somebody did a poor job, but she had to bear the shame, okay, the brunt. She has to bear it, okay? So please, as we go in with some suspicion, not about somebody's dishonesty, but suspicion that someone may have done a mistake, okay? And dig deeper, dig deeper. The best auditors are those who dig deeper, okay? So approach your work with the attitude of questioning, a questioning mindset, Anything they give to you, don't accept it at face value. Question how reliable it is, how suitable it is. Can I use this as an evidence? Okay. So that questioning mindset, not accepting anything, okay, will help us to actually draw valid conclusions. If you get an evidence from one source, if possible, confirm it from another source, okay? I'll tell you a story once I end this, okay, about fraudulent scenario which happened in a bank reconciliation testing I did. Again, when questioning, look at this, okay? So questioning contradictory information and the reliability of documents. Question them, okay? Even if the difference is a comma, just a comma, be careful, okay? Considering responses to inquiries and other information obtained from management and those charged with governance directors, okay? Be alert to conditions that may indicate that there's a possible misstatement due to fraud or error. Now, consider whether audit evidence which you have obtained supports the auditor's identification and assessment of the risk of material misstatements in light of the entity's nature and circumstances. So question almost everything that comes to you, question. Today, I still live a life of questioning. Anything you bring on board, I question it. No matter how it is, I still question it. Whenever I sit in any meetings, I raise a lot of questions. Even in my research meetings, seminars, when I sit and I ask questions. And I've had challenges with some researchers who think I ask needless questions, but that is me. So management assertions, very important, friends, very, very important. And this is where I will end after this session. I will not continue. I'll go to the next session. So, the directors produce the accounts. They present the accounts, okay? And they are telling us that the accounts they have presented are actually correctly described. They are telling us that the accounts they have presented have been properly classified. Is it true? For, these guys have recognized an internally generated intangible asset as an intangible asset under IAS 38, when in fact this internally generated software or intangible does not meet the pirate criteria under IAS 38. Have they really classified it? These are questions you need to ask, okay? And again, they are telling us that the figures which they have shown are arithmetically correct and fairly disclosed, fairly estimated. And again, overall, they are saying, hey, the accounts we have presented, overall, the bigger picture you see is the true and fair view of proceedings which has happened. Okay, ISA 315 tells us that we should understand the entity and the environment in which it operates so that it will help us to identify and assess any risk of material misstatement. So whatever the management have told us, we don't have to accept it on face value. Okay. Now, there are two usually, okay, which we normally would pick up, okay. ISA 315 will pick these two up, but the other one, because the IASB has issued it, we'll look at it. So we'll consider both. Let's start. Number one, assertions 1. Into 3 categories. The first 2 are normally what generally accepted, but the third one we will still look at why it also applies. Okay, any assertions about classes of transactions at the transaction level and events for the period under review. These are the assertions management are saying. They are telling us that they occurred. They are complete, they are accurate. There's a cutoff and there's classification. Let me start from underneath. Classification, what the management is telling us that all transactions and report and events have been recorded in the proper accounts, the proper records, in the proper books. We've not misclassified them. There are times we end up with C accounts. So let me go back. There are times we went to the field whilst with KPMG, and all that we do is to reclassify the accounts even before we start auditing, because they may have wrongly posted a certain expense account into a different expense account. A salesman's salary may have been posted into general salary and administration, but we want to move it into selling and administration expenses. classification. They're all expenses, but has been misclassified. Cutoff, they are telling us that transactions have been recorded in the correct accounting period. Is it true? Sometimes there could be an overlap, okay? So check the cutoff, okay? Accuracy, they are telling us that all the data relating to the recorded transactions are arithmetically correct and appropriately recorded. Is it true? Completeness, anything which should have been recorded have been recorded. Anything which should have been. So are there some omissions? Okay, we need to look at that, okay? Occurrence, it did occur. Okay, the event and the transaction did occur. And it pertains to our organization and not to some other organization. So what they are saying is that it occurred within our organization. The second one has to do with assertions, management assertions about account balances at the period end. Existence, and normally you see this at account balance level, usually in the statement of financial position, where they are talking of existence. So talk of asset liabilities, they exist. We can verify their existence, okay? Rights and obligations, we hold the right to control it, okay? It is ours. Or we have the obligation to pay. We have incurred it. So we want to see these ones, okay? Again, completeness comes in here. Anything which should have been recorded has been recorded. We've not left anything out. Valuation and allocation, we are saying that the assets, the liabilities, the equity interests, they are included in the financial statements at the appropriate amount. It looks more like accuracy, but a bit different from accuracy, okay? Accuracy could be more mathematical. So valuation could be using some models to assess the figures, okay, the quantities. And that any resulting valuation or allocation adjustments are properly recorded. Okay. Now the third point, this is what I wanted us to say in terms of presentation and disclosures. So two things. Usually, you will see that assertions at the transaction level could normally apply to the income statement. But of course, there are some overlaps here in the financial statement of financial position. And almost everything here deals with statement of financial position, the balances. The third one, assertions about disclosure and presentation, okay? So I'll come to this. I'll give you a conclusion remark on this one. So here, we are saying occurrence comes in here. Remember, occurrence occurred at the transaction, okay? It comes in here. Rights and obligation occurred at the account balances. It also comes in here, okay? So here, two things, okay? Occurrence and then R&O. So here, what they are saying is that the disclosed events, the transactions, and the matters which we have reported actually pertain to this company, and they did okay. They did okay. Not to any other company, but to our company. Completeness, all disclosures which needs to be included in our financial statement, we have included them. We have included them. We've not left anything out. Again, classification and understandability, they are saying the financial information, even sometimes non-financial information has been appropriately presented and described, and the disclosures are clearly expressed. Today, we have integrated accounts. So you see the classifications there, okay? Difference between CSR and sustainability should be clearly classified. They are not the same. Sometimes we think they are the same. They are not the same. Again, they bring in accuracy and valuation, so any financial or non-financial information are fairly disclosed at the appropriate amount. Now, this is the note I was saying. So there was a revised ISA, the revised ISA 315, okay, identifying and assessing risk of material misstatements through an understanding of the entity and its operating environment. Now, it was issued by the FRC in 2020, okay, and it is applicable to all financial statements which started on or after 15 December 2021. Now, they consider only assertions in 1 and 2, not this one. Or there are the transactions and then are the account balances, not this one. ISA 315 revised in 2020 by the FRC, applicable from 15 December 2021. They recognize the first two, not this one, okay? But listen carefully, the IAASB, okay, Audit, the International Audit and Assurance Standards Board, definitions for completeness and good practice as presentation and presentation and disclosure are part of the final elements. So they said we should include it. We should include it. So the IASB said, listen, let's include this one. But now disclosures are coming in. Okay, I'll end here after this. So how do we confirm these assertions? Okay, and this is what you should look out for in your exams or in any exams. You would always want to mention or comment on the assertions to make you outstanding. Otherwise, you waste your time. Okay, we should gather sufficient evidence. Let me not use sufficient. We should gather evidence to validate the assertions used in preparing the account. So not just evidence, we are supposed to gather sufficient and appropriate. Okay, so the evidence we gather, we must assess its sufficiency and its appropriateness. Is it relevant? Is it of the right quantity? Is it reliable? Okay, now we must evaluate relative importance and quality and quantity, like I said, to support our opinion. Any evidence we gather is persuasive, not conclusive. We are dealing with reasonable work, reasonable assurance. So that's it. Remember, audit evidence must be relevant to assertions being tested. Not all the tests we perform are appropriate to all assertions. Not all are appropriate to all assertions. For example, you cannot go and conduct an analytical review on the title deeds of a land. No, like title deed, the company is saying this land belongs to me, the cars belong to me. You want to see the vehicle registration documents in the name of the company. Do you have to go and do some calculations? No, you don't do that. Okay, you don't do that. So not all tests are appropriate for all assertions. If you're looking at rights and obligations, you need to inspect, you need to see evidences, okay? Finally, limitations of time, okay, and cost may prevent the auditor from obtaining evidence from all possible sources. There are times you seek for the evidence and you don't get it. You just don't get it. It will take forever. Assuming your evidence is coming from a health sector, sensitive information, how would you get it? So at this point, what do? You use your judgment based on the available evidence you've had. If you need to state that, listen, my work was limited in scope because I didn't get X, Y, and Z evidence, you need to say it, okay? All right, I'm gonna end here. We'll continue with test of control and the audit evidence. Now, I said time is far gone, but I said I want to cite an example. So in one of my audits, the difference in the material, in fact, was fraudulent. In the fraud that we detected was a comma. So question anything that you see was a comma. This finance guy goes in, takes the bank statement from the bank. He has his own printer at home, and he will take off some money, okay, because there was no segregation of duties. He was the one who would send the money to the bank, collect bank statements, prepares bank reconciliation statements. So he had a ways and means to siphon some of the money. He banks the money at the bank, takes the bank statement, and he will adjust it. The only difference that exposed him was that when we went for the confirmation from the bank's figures, they normally do not put a comma. So if it is 1 million, they will write 1 space 3 zeros space 3 zeros. What this guy was doing is that if it is 1 million, he will write 1, comma, 3 zeros, comma, 3 zeros. That gave him just a comma, okay? So be careful. Question anything that you see. Question anything that you see. All right. I'll leave it here and I'll see you in the next session. Bye for now.